Okay, so I'm talking about double sweeps and how they occur in markets and how we can use them. So basically, a double sweep is when we have a liquidity point, maybe this low, and price comes to sweep the liquidity point, goes up and it sweeps the initial reaction again before buying to its direction. So this was our initial reaction to sweeping the liquidity points here, and the price sweeps it again for the second sweep before finally delivering. So that's basically what a double sweep is. Now we've seen how they occur in markets. Now we have this first one where we might have been bearish or will be bearish, and the price has an MSU. Now after sweeping this MSU, which is this investment liquidity of this low, sweeping it, price pushes up, giving us the initial reaction to sweeping this investment liquidity, but price comes back to sweep that first reaction before finally pushing up. Now this pattern can happen in this way, or it can also happen in this manner. But after spotting the investment liquidity, price sweeps it and push higher, but doesn't break structure yet to give us sort of a real BOS. Instead, it just mitigates and then sweeps the initial reaction again one more time here before finally pushing upwards. So this was the first sweep. This was the first reaction to the investment liquidity, and this is the second reaction to sweeping the initial reaction of sweeping investment liquidity, giving us our double sweep right here, and the price buys on the second sweep. While this is when we have a liquidity point, like the first example I gave, we have a liquidity point, price sweeps it, gives a reaction, a first reaction to sweep the liquidity, the price comes again to sweep the initial reaction before finally buying to its destination. Now these are the two ways that double sweep can happen. While on contrary to this one, to this second way of double sweep, there are situations whereby we will have a liquidity point as such, a liquidity point here, price sweeping it, giving the first reaction, sweeping the first reaction again for a second reaction, whether we have a double sweep and should buy, but price break structure, making the inducement liquidity come to this low, which means that the most important liquidity or the liquidity that price actually needed to deliver was resting below this inducement liquidity and no longer this liquidity points that would have been spotted on this particular time frame for price to just sweep twice and then buy it. But instead, price break structure making this liquidity to come to this low, sweeps this low before finally buying with the MSU kind of pattern. So it can happen in this way most times where maybe price is not yet efficient to deliver and still needs extra liquidity by creating this additional liquidity and sweeping it. But on most occasions, this is what happens. It's either in this pattern or it's in this pattern for the double sweep. So let's see chart examples now. Okay, so this starting from this line right here, we have all of delivery, and we can see from the beginning double sweeps that I could find come to 1 minute time frame. Mm, okay, so starting from here, we can see we had liquidity swept here, price book structure, and we need to have a delivery. All right, so now we see this is inducement liquidity on M5, and the price comes downwards, sweeps the inducement liquidity for the M5 on M1, currently on M1, gives an initial reaction to sweeping this liquidity, but comes back down again to sweep this first reaction, giving us a second reaction before giving back down again to take it for the third time. But then the idea of double sweep is that we want to see price after giving us the first reaction like this. Okay, so after giving us the first reaction and reacting, we want to see price come and sweep this initial reaction and then move quickly away from sweeping it. So that's the idea of double sweep. Is seeing price give an initial reaction to sweeping liquidity, coming to sweep that initial reaction and moving away quickly, giving us a bullish intent or a buying intent after the double sweep has occurred that price wants to push further. So we don't want to see price sweeping this double sweep and then still lingering underneath the initial sweep. This is more of going to give a bearish delivery than it being a double sweep that will cause price to buy. So when you see after price sweeping this initial reaction, it moves quickly away with a rejection or with an opposing candle that is created quickly or that moves quickly. So immediately we see that rejection or that quick move away from sweeping this initial sweep. That could be our entry where we can enter and then see our price delivers away. So on this first example, we see the first sweep to the liquidity, price rejects and then comes to sweep it again for a second time. And I can be certain if I should use let's see replay tool here. Okay. So we see the first reaction and price has swept the first reaction. Now upon this candle closure, it closed a bearish candle still. But the next candle we see price quickly push up and even rejected and close the bullish candle. On this bullish candle closure, we can open our trade right there. Stop loss for me will be below this low as I expect it to be a mitigation of this point and price wants to move away. Then set targets. Now let's see what happens. Price came down for the third time, giving us a third sweep in this scenario, and then immediately rejected from that double sweep away from that region. TP. Now, the idea is that most times, or a lot of these scenarios, price won't go for a third sweep. But in this case, there was a third sweep before price started moving away from this point of interest. So let's see, where was the order? So, let's see. Example. All right. So now over here, we can find another double sweep again. I think this was M15 inducement liquidity or 1 hour, was it? Was it? Okay, yeah. So this was 1 hour time frame in this liquidity right there. And now on the M1 time frame, we see price. Yeah, okay. We see price come downwards and sweeps it. Or before that, we could actually spot this late cycle, liquidity cycle of build up inducements, sweeping 1 hour time frame inducement liquidity. And then what happens from here? What we can see is that price. Where is it? Price swept it, price swept the inducement liquidity, pushed up for the initial reaction, pushed down again, and then broke structure, like so. You see, after the first two sweep, we had our double sweep here first of all, but price broke structure. Now with this double sweep happening, if we should use the replay tool, let's see, yeah, if we use the replay tool and we fast forward price, okay, we had our first sweep and reaction, the price pushing downwards again, sweeping the initial sweep. Now we see price closing with this little rejection, but that is not enough for me to enter this trade yet with this rejection. I need to confirm that price needs to be bullish from this point onward after sweeping the initial reaction from this 1 hour time frame inducement liquidity. Remember that just because this is inducement liquidity on the 1 hour time frame, I will not just take a trade with this bullish candle, even if it was a rejection candle. No, because it is just a 1 minute time frame candle, and I am wanting to trade from the objective being 1 hour time frame is liquidity. So the only reason I'm taking a buy here is me seeing the presence of a double sweep occurring to the 1 hour time frame inducement liquidity. So we had the first reaction to it. Price will be the first reaction at closing with this rejection, and then the next candle being a bullish candle closing here. This already gives me the idea that price will be bullish from sweeping this inducement liquidity and wants to reject from here. It's just creating the first reaction and then sweeping it for extra liquidity before it fuels this move. It's enough for me to take a trade. And with this, I will take my trade. Stop loss approximated to 3 pip. And that will be my trade. Now, playing it further, what do we see? We see price. Now, remember, I explained earlier a type of double sweep whereby we have the liquidity point, price giving us a double sweep. We're going to sweep it one more time, going after the inducement liquidity from this break of structure occurring before finally delivering away. But my main focus or my main course of entry would be if I see a an immediate rejection for sweeping the initial reaction on this second sweep. This is where I want to take part in the market. I'm not expecting a triple sweep, but instead a double sweep. So entering the market, price still has every possibility of going for one more time for a third time before delivery. But this doesn't occur all the time, only in a few cases, like the first case you had, and then in this case, whereby we see our break of structure, this being our individual liquidity, but missing a rejection or an instant reaction to sweep this initial reaction. I'm already in this trade. So we see that price went again for the third time for the additional liquidity before finally delivering away from this point of interest. So remember, the cause of me taking this trade was not me anticipating a third sweep, but instead me seeing an initial sweep, price sweeping this initial sweep and then rejecting it impulsively, giving the buy or a clear buy intention that it wants to reverse immediately from this point. That was the reason I took this trade. But unfortunately, price needed a little bit of liquidity again from the digital liquidity of breaking this structure, giving us the MSU before it finally bought up. So that was the second example. Let's see the third example on how we played. Where is it? Where are you? Okay, we have like here. Now, we broke structure right here. Broken structure, inducement liquidity on this low on 5 minutes or thereabouts, and the price comes to take this inducement liquidity. Now, what can we see upon taking the inducement liquidity? Let's replay. Okay, we took the inducement liquidity, and after that, we had our first rejection to taking this inducement liquidity. Now, this first rejection with the way it formed, it's inconvincing for me to take a buy because it closed a bearish candle and then a bullish candle after. But it's the first rejection. Now for the next candle, you see price going after the initial reaction for a double sweep to occur. And then price sweeps it. Now, upon sweeping this initial reaction, what do we see occur in price? This candle closes a bullish rejection candle. The closure of this candle being a rejection candle to sweeping this initial reaction already gives me my confirmation to buy, as it was reducing liquidity. Initial reaction was formed and then double sweep occurred. I can use my stop loss to 3 pips and then see what price does from there, and the way it's gone, just like that. Remember, the cost of trade was inducing liquidity, initial reaction, price sweeping, initial reaction, and then rejecting impulsively from sweeping it, giving me my double sweep and my confirmation to enter that trade. So that was that for that. Then where was the next double sweep that occurred this week? Hmm, okay, we have it over here. Same thing, same thing. This happened during Asian session as also. So let's see. We had our liquidity right there, and we are waiting for price to approach our liquidity and see what it does. Now, price to exit the first time and then gave our initial reaction to sweeping it. Now, this reaction is not giving me the buy intent that price wants to continue buying. Instead, the price could always just do this and continue lower. But after this initial reaction, we see price go towards the initial reaction and okay, sweeps it. Now, after sweeping this initial reaction, while the next candle formed, a rejection, a bullish candle, and this candle did it actually form quickly, or rather, it didn't give us a clear sign of rejection as we can see on this replay too. But then this being a bullish candle with a reasonable size of the body to the wick, I can take a buy from there. Not just because I know it has already played out, but because that is what I want to see. Just the intent that price would be bullish away from sweeping the initial reaction is enough for me to buy or take a trade, and then you see price move away from there, tapping on 3R. So that was for this example for the double sweep, and then for the next, let's see, where is it? Next. Okay. Now this example, this was it? Yeah, I think it was on M5. Yeah, this was on M5. This was the initial liquidity on M5. Okay. Now, how many reactions on the M5? We can see how many reactions. You can see the first reaction here, the second one over here, pushing upwards to here, the third one, and then the fourth one, and then the fifth one. Now, this obviously, upon seeing this second reaction, I would have bought from here using the double sweep and maybe using approximate 3 pip stop loss. Okay, that would have been saved if I had used 3 pip stop loss. But then the reason I could have gotten into this was just based on the second reaction. But assuming I executed up here and used 3 pips stop loss, I would have taken out before price moves ahead. Now, the reason for this was because of the news events that was about to happen minutes after taking the inducement liquidity. Price just needed to induce and liquidate more liquidity before moving away, as its intentions for the news events would have been bullish. So that was why this occurred. This was more than the double sweep. It occurred 1, 2, 3, 4, 5 times, more like an infinite algo sweep before the news event occurred and price moved upward. So this doesn't count as a double sweep, and we couldn't have caught that. Okay. So this would be the explanation for um the buys that we had on Friday, how they were valid, and the ideas behind them. Now, looking over here, if you check the daily time frame, yeah, on the daily time frame, this whole thing looks like a fair value gap. Yeah, it's not. It doesn't look like it is a fair value gap. Then that's Friday basically just came and tapped into the fair value gap for it to um, trade off from it after forming fair value gap on the daily time frame. Since we have been bullish overall, we are looking for bullish objective to continue the bullish movement. Now coming to yeah, on 1 hour time frame, 1 hour or 4 hours was it? Yeah, 1 hour time frame. Yeah, 2 hours. Let me see. Okay, on 2 hours time frame instead. That's the loan we bought from was our most recent break of structure, as this was our most recent break of structure with IRQ being here. IRQ being here. Now, when we come to 5 minutes time frame, that low we can spot a an OB on the 5 minutes time frame here. This is another block right there. Just to see it clearly. Yeah. So with that block being present, and it's been another block that continued order flow, we had this mitigation here, um, here, after sweeping liquidity here, having so many sweeps that caused this event. So that just basically looked like money being transferred from here to here to here, and then price just broke structure over there, pulled back to come back to the extreme to continue the bullish move again. So that's other block being spotted and seeing that it is a value other block we can trade from. All of this was just creating extra liquidity for the extreme on the 1 hour time frame where we have this. This basically looks like an MSU. This looks like an MSU. It's creating this liquidity for the extreme. Price to gates and came to the extreme and bought from there. But anticipating these buys, we can see that after price had approached the other block on the 1 minute time frame, or even on the 5 minute time frame, I think. Yeah, on the 5 minute time frame, we see price building up over here, all these build ups, and then finally dropping from the build up, creating this trap over here. Okay, this has been trap. We see that this build up occurred before price had mitigated the 5 minutes time frame other block. But then after the trap, price drops into the other block. After the build up, price dropped into the other block, inducing sellers and having that trap. And then having a double sweep after the build up. Now we see price created the build up here, dropped, pushed up initially after the drop, and they came back down to sweep this initial reaction. And for the initial reaction after sweeping it, we see this very impulsive bullish candle that occurred after the sweep. That signifies buy intent of price after the build up and then the double sweep. That just tells us that price is ready to buy. And then you see price start delivery, a bullish delivery on this side. Uh, then after taking the trap, we had the pullback into this. I think this was on 5 minutes time frame. Yeah, that was 5 minutes time frame LQ. Yeah, and price swept it. Gave the first reaction to sweeping it, even on the 5 minutes time frame can be seen. Gave the first reaction and the second reaction, giving us this. I think I entered from on 1 minute time frame. Yeah, after the first reaction, on this second reaction, this bullish candle, the formation of that bullish candle, if you see here, yeah, let's see. So we had the 5 minutes time frame LQ there. Price gave the first reaction and then gave us the second sweep, and then the next bullish candle. Yeah, I took my entry from there. Yeah, and then to TVP. That was the trade that they came back down for the third time before eventually whooshing up. TP. So that was just the idea of it. I think in the previous video I did when I explained of the price behavior towards objective, we can as well say that the 5 minutes time frame order block was the objective that price needed, and this build up and the inducement into the other block was price behaving. After this behavior and seeing price giving us the intention of it wanting to buy, we can start trading the delivery away from the objective. So that was the whole idea behind it. Hope this video helps.